Okay, traders, Sean Kozak checking in here, president of NeuroStreet, and we're really excited for the upcoming launch webinar of the all-new Golden Fibs multi-time frame trading system. Now, for the last several months, we've been basically deep in the code bunker working with developers to take what was originally the Golden Fibs software that many of you already own and many of you are interested in owning, and basically turn it into an automatic volatility assessment trading system. And what does that mean? Well, we're going to get you to come to the webinar because I'm going to be explaining in immense detail these main topics. Now, first of all, I want to explain that the MTF Fibonacci component is still standard in the Fib system. So if you have not used multi-time frame Fib confluence, or if you're wondering, is this a direct replacement for the old Fibonacci stuff, essentially it is built in. So not only do you have the system, but you also get the indicator component as well. Now, what is this semi-auto that everybody keeps talking about? Well, what we've done is we've basically integrated everything that you could possibly think of for a trading system in an automated fashion. The only thing that it doesn't do is it doesn't take your orders for you. It's not a trade management suite. It's a semi-automated trade system. So what does that mean? Well, first of all, we're going to look at automatic trade planning calculations. We're also going to look at automatic risk planning calculations. And most importantly, we're going to use volatility planning for dynamic detection. And what does that mean? Well, first of all, when you look at support and resistance, everything around levels of structure is factored into the average range of the market, and the average range is always fluctuating. So depending on if you're trading futures, stocks, forex, if you're trading small time frames, large time frames, it doesn't matter if you're trading crude oil or the euro dollar or Apple stock. What's important is that the average range of each market is independent from each other, so therefore the market is auto-adapting and the system is also auto-adapting. Now, MTF stands for multi-time frame, and that's exactly what this is. It leverages multiple time frame Fibonacci engine, a Fibonacci engine, if you will, and what it's doing is it's calculating over 6 measurements of Fibonacci of over 300 trading days to be able to plot your intraday levels. And what I'd like to do in this brief video, now that I've kind of gone over the basics, is I want to show you exactly what you can expect coming into the webinar, okay? So let me just kind of minimize this for a second. So what we're doing is I'm going to cover 3 topics right now. We're going to look at support and resistance, ATR volatility assessment. We're going to look at the auto fib system component, and we're also going to look at the trade planning and risk planning component. Okay, so let me just kind of go over here and we'll do a deep dive demo. I'm going to go in here and turn all of the planning capabilities off. And you'll notice I'm using the euro dollar for an example because there was some great trades on the euro dollar today, and I think it's good to kind of go over some stuff that actually happened in current time. And this 333 volume is around the equivalent to either an 8 or a 13-minute time frame. Essentially, it's just slightly larger than a scalping time frame, but it's slightly smaller than an intra swing time frame. But it definitely does have merit. So what we'll do is we'll just go in here and take a look. The drop down up here is basically where we call the master control. And we have the ability to turn the structure background off because it's got built-in trend detection into the system. So it's automatically telling you when you're in trends or when you're in oscillating conditions, okay? And that's really good depending on if you're a trend trader or if you're a range-bound trader, okay? So for the most part, I'm going to keep it real simple, mainly because a lot of traders start trading trend strategies. So before we start getting into advanced oscillating calculations and looking at all the different stuff around how do you tell if you're in a trending or an oscillating market, I think it's safe to say that you want to be buying support in bullish markets. You want to be selling resistance in bearish markets. That's a standard quo, but it's really nice to know that we can just go in here and we can turn that on, and we can see when we want to start planning long trades based off of, compared to when you want to start planning short trades, okay? So what I'm going to do is I'm just going to start taking a look over here, and I'm going to show you where we actually broke out of a downtrend down here and we broke into an uptrend up here. Now, we didn't quite validate a trend until after coming into the open of the Euro session and the overnight trading session, right? So let me just draw a little line in the sand here, and this is exactly what, oh, wrong line. We'll put this in here and we'll do it like that. So that's basically where we started going into the trend. And I want to pay close attention to what happened right here at this low. And this is exactly what the fib system is designed to do, because we need to understand that these levels of support and resistance, what you're seeing on the chart, these red levels and these blue levels, these are what we call fib confluence levels. And inside these fib confluence levels, okay, it's literally calculating, okay, let me just go in here and show you. It's calculating 300 days of support and resistance using the 13-minute fractal, and it's using 6 measurements of Fibonacci confluence, which is really exciting because it tells us that even on day trading timeframes, you're getting the power of multi-time frame processing, which is really, really powerful. Now, why is this important? Well, because ultimately I want to know why this market stopped here as opposed to why did it stop there, right? And that's exactly what this software is designed to do. I'm going to go in here and we're going to turn this up, and I'm going to show you exactly how we can plan these trades in advance so that you always know where you're trading before it happens, which is one of the reasons why these types of strategies are so advantageous, right? Most traders want to be trading before they take the entry. They want to plan in advance what they're doing so that their risk, their targets, their calculations are all premeditated, okay? So we want to be buying in a green background, and what we want to do is I want to go to this trade master planner, and I want to go down and turn longs on, right? Now I could go and turn far longs on, but I don't want to do that. I want to basically turn longs on. And I'm going to basically come in here, and we're going to turn this on. Perfect. Perfect, like that. And we're going to turn it like that. Okay, so now what we've done is I've mapped out the entire trade plan. Now you're going to notice that you'll see this green box right here. This green box is basically a factor of volatility. It's a volatility box. It's a buffer. Okay, and it basically tells us exactly where this fib level's volatility reaction time is supposed to be, right? It's basically saying, okay, it may not get right down to the fib level, but it's going to start reacting, and price is going to actually react off these areas. And we have the ability to plan our entry, our stop loss, and our targets in advance. Now, the entry is based off the midpoint for this example, which we'll get into in the webinar. But I want to explain to you that we can see in advance where we plan on taking our exits. And you're wondering, well, where do those targets come from? Well, that's exactly what this planner is for. We basically set the ATR period. We can plan the buffer zones. We can plan the stop zones. We can plan the volatility and the targets. And you can recalculate your plan on the fly, which is really exciting. And this allows us to turn the long and the short trades on as well. If you wanted to turn the short on, you can see you can flip these around. Okay, you can turn them both on, okay, or you can turn the longs on, right? Turn the shorts off. It's really important to know you have the complete flexibility with this advanced interface. Now, what's nice about this is that we also have the ability to plan your stops and targets. As the market's adjusting, as the volatility is adjusting, what we're doing is we're saying, okay, if the volatility is contracting or expanding, now you have the option to plan your stop loss calculations, which tells us if you're building ATM strategies or you're using a position sizing calculator and you're looking to scale in or scale out of trades, wouldn't it be nice to know that you can plan your average risk on every single trade? And these stop losses are based off of every single fib level on the chart. Okay, now I'm going to assume that we could look at entering here as one point, and then we can also look at entering here as another point. And I'll explain why. Okay, because I have it set to be very risk adverse with the entry at the midpoint. If I go in here and I turn the indicator settings to enter, okay, I'm going to turn this parameters off, swing trend off, trade planning. Give me 1 second. See how it's down here? We're going to put it at the ATR, right? That. I'm going to just go in here and calculate it like that. And you see how the entry switched? Okay, do you see how the entry switched right here? to the edge of that zone. It just depends on how you want your risk calculations set. And you see how the target's adjusted, and so did the stops. So it's all based off of your engine right here, based off how you want your volatility set. So let's go bar by bar. You see how it came in and it came right down to that entry point, right down there. Okay, there's T1 right there. Okay, and that was a trade that took place off the open of the Euro session last night as I'm filming this video. Today it's a couple days before the weekend, and we're planning this webinar for next week. Now you're going to say, Sean, why don't I just plan to buy the fibs? Well, the truth of the matter is that a lot of people use the fib levels as the standalone base level tool. The only issue is it doesn't give you any type of calculations with regards to planning out the areas in which volatility is affecting the fibs. And this is where we spent months studying it and looking at why is this reacting here? Do you see how price comes right here? I'm going to go down and turn the shorts on for a second. We'll spend a lot more time in the webinar going over this stuff. I just wanted to share this video with you because I think it's really neat to give you guys a primer to know exactly what's taking place. Okay, and let's take a look over here. Why, if you take a look at what this happened here, we broke into a downtrend. We have a red background, right? You want to be shorting in a red background, buying in a green background. Super easy, super simple. I'll explain the rules around that after, but for the most part, take a look at the impact we had at 1157.40, right? We came right up into that area, came back down, tested it again, and then came down and hit target. See our do you see how T1 kept moving? Okay, it kept adjusting. It's because volatility is moving, and we're always making sure you're on the right side of the volatility for the structure levels. Okay, so moving forward, there was some really great trades that took place today across this market. We could go over a whole bunch of different markets, but we're going to reserve the right for that in the webinar. I just wanted to share with you that you have the opportunity to join us next week, and what we're going to do is we're going to show you how to leverage volatility analysis using the auto fib calculations and the ATR planning factors so that you can basically turn your fib trading into a semi-automated strategy. Okay, so hopefully you enjoyed the video. I really look forward to sharing this with you next week. And if you have any questions pre-event, please don't hesitate to send us an email at support@neurostreet.com. Take care, traders, and we'll see you at the event.